Investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here on this Wednesday, the 21st of December. And one of the reasons what I was talking about, the slightly positive bias I had yesterday, one of the reasons is I've spoken about this forever. The 200 period moving average to me represents a number of things. It represents a look back period that is meaningful and only happens after a long period of time. Obviously, with the 200 period moving look back period, it's not a 9 or a 5 or something like that. Therefore, when the price hits that level, I've got to respect it. The fact that it came down a single leg from that peak E at 34,712 on the 13th of December after that double top, where if you draw a vertical line from there to there, you'll see that the technicals were way weaker on this rebound. And that just said, at least in the near term, there should be some kind of a decline. And that decline should test key support levels where it went right through the 50 period. I don't use the 50 much. I just keep it there. It's just, if we get there, we get there. But the 200 is so important. Look how it became support. First of all, it was resistance, and then it became support. And then when it broke out in that whole period going through late October, early November, you remember my rule of thumb is that for the Dow, if the last week of October, the first week of November, it's close or at a yearly high, there's a good chance that no matter what is said, no matter what is done, by the end of the year, there's a pretty good chance that it closes very close to that high. Well, very close to 34,700, and we're at 33,200 now. That's 1,500 points away. I'd say that's kind of close, but let's see what happens on the 31st, which is the 30th is the last day, trading day of the year, and that is a Friday. It's a week from Friday. A week from, gosh, this Friday, that's unbelievable. Anyway. So because of that, we added to our long positions in the diamonds yesterday. And one of the small positions we've taken off, we added it back. And we've missed getting to a position, the day's young, there's still time, I guess, into a position that said, if there's a pullback, we will add to the 3 times long position. But in this particular instance, that's okay. This is more a directional move because there are enough. Let me just show you something. This is the daily chart right here. Let me move it over so that it goes. So this is the monthly, this is the daily. Within this context, the 9 period is under the 14 period. The MACD is very weak. The stochastic is only at 12%. The on-balance volume is not good. The relative strength has turned up, but it's still under 50%. The 9 period moving average is trying to get closer, but to get over the 14, it's going to be a move into the 33,600s to do that, number one. Number two is, let me just get this mouse over here because the other one just leapt away from my fingers. The other is the aspect of the S&P, which is up 41. The Dow is up 381 at 33,230. The S&P is up 41 at 3863. Look, this has way more of an effort to move to the upside because that double top, and I've spoken about this, there's so many things that you can talk about here. Look, 400.51 on December the 1st comes down sharply, goes back to 4,100.96 on the 13th. That was the 13th. I forgot to change the day. The 13th of December, and then it comes down deeper. And I have to respect that the S&P is really struggling a lot more. There, the technicals are way weaker. Look at the QQQ. And of course, we've got the weekly charts. I've done that. I'll do it every day. Well, I need to do it here as well. Let me show you the weekly chart. The weekly chart, the S&P failed to hold. It snuck above that green line. This is the Chapman Wave inside track repellent zone. It went above it and then failed to break above it. So this actually B, that should be a C, I believe. It's a weekly chart. It went to a C. C is a little bit better than a B because a B failure says be careful because you can go all the way back down and take out the left side low. In this case, look, we're holding key support and a Fibonacci number support at the 3,800 level. We went above and then failed to break above the inside track repellent zone. Same as the QQQ. Let's see if I'm going to the right sector. There it is. The QQQ, 1, 2, 3. This is way below the 200-period moving average. This has got so much more work to do. And look at the Chapman Wave inside track repellent zone right there. I'm getting close to saying, you know what, you can raise it now. In fact, I'm going to raise it. I'm going to raise this line. You remember, this is a work in progress. You use it because if the technical tools have actually obtained the objective, then you've got to look for another way to look at it. And in this particular instance, I'm saying we've already broken out above those resistance levels and failed to close above it. Let's just go to the outer line. And now that outer line is a little higher. And it says that for the QQQs, the NDX 100, to really show tremendous improvement, it has gone. This is an unofficial buy mode because it went to a peak D and just one of the smallest rallies that we've seen in the QQQ. Let me just get that in line. There it is, C. And there's a D. And this week looks like it's going to make a peak D because it's not going above the 298? 296.88 level. It's at 272. I don't know what's going to trigger that kind of a move in the next couple of days. So this has gone. I have to now go back in retrospect. I'm putting in a plus, an up arrow. That's a little unusual, but I like things in the methodology. I like it to look. It's gone from a buy signal to a buy mode to a D. So therefore, I have to put an up arrow because that's what you expect in the Chapman Wave in a buy signal to buy mode, that you go to at least a D. Okay, so now what we're looking at is that's fading, and the monthly chart so far is really not looking great. IWM. In fact, tomorrow I had a question. Yes, I'll do that tomorrow. I will do kind of not necessarily my outlook for the first quarter of 2023, but what we're looking at in terms of the technicals, what needs to be done for things to change. IWM also failed at the Chapman Wave inside track repellent zone, pulling back. So that with that as a context, I'm saying that there is so much work to be done. If we're going to make new highs in 2023, you can't just have the general, which is the Dow, leading. You have to have the participants of the troops. It doesn't work that way. Well, it can, but that's not a good sign because then it's an aberration. You want the full market to be attending to the bullish mode or the bearish mode. Okay, with that said, I just want to quickly show you that gold, I'm expecting gold to pull back within a range, but it's stuck in a range between 1791 and 18, maybe it could even go to 1852. It's trading at 1828 right now, up 2.5. I'll be right back. Basil Chapter, taking emissions hour, Dow's up 382.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so someone had asked me, I'll do this right now because it's kind of pertinent since it has to do with options. Do I think that CASAVA, which is Cassava Sciences Inc., based on the 30-minute chart, has some upside potential, more like a bull pattern? Yes, it does. In fact, my target here would be, look, if you take this low right here at 37.06, it goes to peak A, then it goes to peak, then it pulls back. So the low was 37.06, and this low is 37.10. So this is all viable, and it's done a big test of all these lows right here at this particular point. So the question is, do I think it can go to the next level? In this particular instance, it would be this level of 40.56. It's trading right now at 39.15. We're talking about a 30-minute chart, so it doesn't sound like much, but it is. And what I would do is I would draw from the bump up against the canyon wall right there, and then I would choose the tiniest candle if I could. This is a little tougher. All right, let's just do that. And then I have to get the Chapman inside wedge target resistance line. That goes to there. And now we see, can I join these two? If you can't go to the exact low, oh, that was low. I'm sorry, that's a mistake. 37.01. I thought there was a mistake. There it is. That's 37.01. So that is A. This is now new leg B. But you've had a bunch of restarts, and I love that. In a chart wave, if you go peak A, then peak B, and you pull back, as long as you're holding the left side support, that's good. In this case, you kept making lower lows, but you have done it in a rectangle formation. So this is the way I would do it. And of course, this is just pure, this has got nothing to do with knowing whether there's, in a biotech, whether there's going to be a new news event coming up or it doesn't, you don't know. But I'm just saying, this would be my target in terms of time. Now I'm going to extend this to the right. And I'd say at this acceleration, this is a little bit aggressive. Going to, is that still today? On the 21st at 3 p.m.? Yeah, this is a little too aggressive. I probably want to go to this peak here and move out. I'd say by Friday, there's a chance that if it takes out this candle high of at 10:30, that was yesterday, of 39.51, then immediately this left side target of 40.56 becomes, this is the way I would draw it, yes. So it's maybe a little aggressive, but it's just using the patterns that we're talking about. This is what I'd be looking at. You don't want to see it slip under 38 again, because then it's in a rectangle and it's just stuck. And being biotech, it could suddenly have a spike to the upside. But that's not the pattern we're looking at. Right now, it's a positive pattern because it's gone. I'd love for it in this 30-minute chart for it to close above 39.09. If I have 10:30 on the 20th, that'll be very good. So I hope that helps you. Now let's get out of this. And you remember the chapter where we're always looking for a buy signal to be upgraded to a buy mode. That's why you put the up arrow that implies it. So we've snuck with the Dow already up 368. I would have ventured to say that a chunk of the move might be done today. You have to have some other news to really extend and have a much better look to the upside. I just want to make sure that I haven't missed any questions coming in. Yeah, so existing home sales at 10 o'clock, minus 7.7%, thank you, Shazam, versus minus 5.4%. Forecast versus minus 5.9 previous, not good. That's why the market's rallying. You want bad news now. And this is the whole thing that I've been talking about. I'll talk about it a little more tomorrow because it's been a very frustrating day. I had my power. I got a note to say, we're now working on your power or something like that. I don't know what the note was from the energy. And it knocks me off in the middle of a very, very important session this morning early on. Between 8 and 10, at 8:45, bump. I'm off. I'm more fortunate I got back at 9:30, but that was really frustrating. Just nothing you can do about it. I'm sure they might have sent a note to say that it might happen, but it was right as it was happening. They sent the note. So this is a peak C. Now we'll see if there's going to be a potential for a leg D. Now I'm jumping between 1 minute and the 10 minute. Usually I have a 2 and a 5 in between, but I wanted to show you that there are certain techniques. And I mentioned some people this morning that at the low this morning on the retracement to the whole 38.60, 38.70 area, that could have given you the potential for a 2-click session. We don't know if that's going to work. 2-click session means that you're buying it in the early morning and you're getting out in the afternoon, or you're shorting and you're getting out. Maybe you can hold it all the way through the last minute of the day. It must be an intraday trade if that's what you're doing. All right, so back at the ranch, what we're looking at is, so another question came in. I'm just checking the questions. Oh, I didn't even do that. Oh, yes. This is for DK. Yes, the webinar archived, and you will get the actual text of the webinar. It'll all be there because I want you to be able to practice those. I love the webinar, but I have lots of questions. I believe you mentioned. Okay, yeah. Thank you. Another question came in. I hope I've got it here. A radio question. Oh, thank you for reminding me. On JetBlue. I'll be going to JetBlue in a moment. I should have got to it yesterday. I didn't see it until late, and now it's already past the 10 o'clock hour. I need to do that. Let me just do this right now. So what we're looking at here is JetBlue, JBLU. And the question is, great show, airlines. Can you look at them as a sector and at JetBlue in particular? Not in anything right now. Thank you, Golf Guy. So we used to have a GG in the den, but Golf Guy took over. So Golf Guy, we're looking at JBlue. I was going to say when I looked at it last night that there's certain patterns we're looking at here. And one of the reasons why I didn't want to go full-blown along and just say, okay, everybody, all the weakness is over. We're now we're heading for the highs. One of the reasons I didn't do that is because within the context of the IYT, which is the complete transportation index, that includes the truckers, that includes the airlines, that includes something else. It could even be I know XPO. Is that the logistics? I think it has some of the logistics companies. You've got to be really careful. This pullback, this has been, look at the monthly chart, is just not a great chart. And I'm not necessarily a Dow theorist, but I love the concept. It used to be very viable. It's not so viable anymore because look at CSX. CSX is in the rails, it's holding a lot better even than the IYT, the industrials, and it's just stuck like glue to the 200 period moving average in the daily. If you're looking at UAL, I hope it's all notated there. No, I lost my UAL. This is United Airlines. Let's see if AAL is there. I think this should be done. Oh, I lost my airlines. I did them all. All right, so JetBlue I have done, JBLU. And what I'm going to say is that this big arching over, I didn't have a time to finish it. If you do things in retrospect, it always looks fantastic. You want to do them in real life. But in real life, I would have said, if we're coming down, this is the level that I'd be looking at right here. And I always want to bump against the cliff right there. So I'd bump against the cliff and I'd go to that peak E at the top right there. And I'll say, can there be a left side, right side price time match? That's bar symmetry. Yes, there could be right there. A plumb line took you to the day, one day early to get to that exact level of 6.28. So with that said, we'll come back to JetBlue. Dow's up 420 points.
If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So we're looking at JetBlue. JetBlue is trading at 6.59, up 5 cents. This arching over for JetBlue and showing no sign of strength really. The stochastic is just flat at 5%. That's like being at 94% on the upside and flat. I always say flat is great. That's what you want. And the downside, flat means that you're going to keep going lower, or at least you're still weak. 9 is way under the 14. I just don't see, I can see a quick bounce, and that's a percentage-wise. I mean, look at this. It's down almost 1% today, just being down 6-7 cents. But on a percentage basis, that's one thing. But the monthly chart also did almost the left side, right side. Looks like the Eiffel Tower or the pyramid, straight up and straight down. It's taken 2 extra months to get to the left side low of, that was March of 2020. at 6.61, and here we are at 6.59. I have to, and it's been lower than that. It was down to the 6.47. What was it? 6.21 low back in October. I just don't see anything. So you did ask me, as a sector, there were some others that I think were holding a little bit better, but I think the best is if you go to the generic JETS. That's held a lot better overall. This is the U.S. Global JETS ETF, and I think that's because maybe, I'm sure they must have Boeing. Look, the Boeing is up again today. Fabulous move in Boeing. That's helping the Dow, and not complaining. That's great. But I would prefer, if you were thinking of the airlines and you had good reason to think about the airlines, I'd prefer to be a little generic and maybe look at JETS as your core, and then if it's starting to work, you can say, okay, now what's really helping the U.S. Global JETS ETF, and then you can maybe be selective. So I'm just going to refrain. I don't see anything in JETS at this particular time. Now, maybe this is perfect. Sorry, in JetBlue, maybe this is just perfect because you're down at lows, not the low, but the lows. Stochastics flattening out. It's trying to show a little bit of a green candle yesterday, and today's bounced up a little bit. I don't think that I want to get there. I don't think this is all. Look, the move today is very selective. You probably got stocks that in the Dow. I think Nike is helping a lot. So I'm going to say I don't see anything yet in JetBlue. I can see it as just a real quick bounce, if that's what you're looking at, but the much nicer positions to use as a bounce. And look at this, Nike trading at, there it is, trading up 12. That's really giving a boost. Oh, that's the reason, of course, that's the reason why the market was up, the futures were up so nicely early this morning and last night. So, yeah. Now, why is it? Is this one of those days? Yeah, it's one of those days. Yeah, well, a big spike to the upside. Is this a leg F or is it a brand new A? Well, what I do is I say, I don't know yet. We have no position. All I need to do is to notate it, and it says F/A. Simple. A is really positive. It means that every pullback you want to buy, F says, be careful, because you can come all the way back even to the 200-period moving average. 112 will be 3 points. It's already hit 119. There's 4 points off that, almost 4 points off that. So this is just, I have to treat it as a bounce for now for Nike. And this is the B shares. It's nice that it's doing it, but I want to see it hold. I want to see it by Tuesday to Wednesday of next week. I want to see it having held 114 support and trying for 121. That to me would be really good action. So now let's say, what do we do here? Look, we were looking for a D. There's your D. Nope, here's your D in the E-mini, in the 1 minute chart, but it's a huge leg E. This is probably short covering, leg E in the 10-minute chart. So I said earlier on, follow the green line. The green line said crossed positive at about 10:05, 10:02, and it's still green. That would have been an entry confirmation in the 38.80 area, and 2-3 point stop would have held very nicely. Now let's go to something else. I wanted to look at crude oil. So there are a couple of things that really intrigued me last night. We have a dinner that's been talking about rig. We once had rig. We aren't in it right now. Rig is Transocean Limited offshore drilling in oil and gas. So this is offshore. I believe Schlumberger is also. And look at this, Schlumberger is SLB. Schlumberger is trading towards the lower end of its most recent range, but it's had a spectacular monthly chart. Schlumberger. This is, I think it's Canadian Limited. SLB is a symbol, up $1 today, 52.77. But rig, look at this nice percentage gain, 2.5% gain. So I was about to do this. I was all ready to put it on the list. And then for subscribers, I misspelled the actual symbol, but I had the chart and everything said the chart had specific letters. I put in an A instead of an E, but it's up to you. Now, it didn't get to the level that I said to enter, but I love the analysis and everything about it because it was potentially very positive. It's it's up 5.7% today from the intraday, from the close yesterday. It did slip just a fraction, but not enough for us to enter. But I know that some of you do your own homework, and that's really what I like about my subscribers is many of them actually look at the positions and they'll say, everything about this looks convincing enough that I'm prepared to give a few cents. If Basil said X, I can go just a little above it. I know my stop has to then be the distance. That's the point must be the same with the stop. And that's what they do. So in this particular instance, I love the fact that it is actually up. And that just means that it confirms my thinking that this is in play. And tomorrow we will probably, if it pulls back a little bit from where it closes, maybe we'll enter there. But I like to just show that things sometimes you do all the homework and then you get maybe a little too fussy about the entry point or exit point, and you don't think it through just quite clear enough to be able to say, aha, now it's doing exactly what I want. I don't care about the entry price over a few cents because the upside target is much greater. And that's that particular case. The other thing is, within the context of, I wanted to show, crude oil. I haven't finished all these things. Look, crude oil is having a real nice session. It's up $1.79 at 78.02 in the continuous contract. This leg B, to me, at this particular point, says the 9-period moving average for the very first time is getting real close to turning up. That means that the MACD is acting well. The stochastic is still very poor at 42%. On-balance volume is acting well. This says watch crude oil because there's a chance that crude oil could give enough of an upside move here to, at 78.14, try to tackle 80 to 81. And if it does that, all of a sudden the 83.73 200-period moving average becomes the chance, not yet a magnet. It has to be way closer to become a magnet, but it becomes an upside target. But in the weekly chart, it hasn't, the crude oil continuous contract hasn't closed above the pink 9-period moving average since October, when it popped into the 90s for a week, and then that was it. Next week, it popped a little higher, and then it closed down, and then it was red candles almost all the way through. This is the first time we're turning around, and that says I should go to the XLE because there's a question coming up about the XLE. Basil Chapter, Tiger Technicians Hour, Dow's up 506, S&P's up 54. Very nice.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So this is what I've been discussing for a long time now, that there are certain technical tools that you can use that can give you fabulous boundaries where you can follow them, and as long as you're in that boundary, you're on the highway. You're not taking the detour off. You're not taking it to the left. You're not taking it to the right. You're just staying on track. Now look, the E-mini made a Chapman wave. There we go. Instant restart right there. Within 1 bar, rest, and then it goes to the new recovery high, right there. That doesn't mean to say, yes, it's now going to go to a brand new leg D. It says it could, because that's what happens with instant restarts. We saw that a little earlier on in the 1-minute E-mini chart. Look back here. Ooh, wow, look at this. We saw it twice, in fact. Very unusual for it to happen to happen in this particular pattern twice, but it happened twice, going from the 720 low, 7:20 a.m. this morning, all the way to the high of 8:20. And look at that. Then it made the cup formation. The G/C actually went to the D, pulls back, comes back down, trough A, trough B, trough C, trough D, and then it moves up. And I was discussing a phantom peak, some people before, and there's that phantom peak, and it goes to a D in the time frame. This is a time frame that was already charted out with the Chapman wave inside wedge target resistance line. And then it pulled back very sharply to the 3870 level. And then at 10:02 this morning, even with the bad news, which it wanted bad news, it started moving up. And even to this very moment, we're at a G/C, yet this is another G/C. And isn't that, I mean, this is what you want to be looking at, right? So let's just do this. I said that I would do some of this. People have asked me if I'd do it. I don't mind doing it. Right here. So G/C with a little doji candle, a silent doji right there. So be a little careful. But wait a minute. What if we did the same thing? We went elsewhere and we went to, say, crude oil. So this is where you start to see some restlessness and some digestive action right there. Now let's go to crude oil, 1-minute chart. Crude oil, this is a continuous contract. And what's the Chapman wave objective? Is to get you to at least a D. A buy signal gets upgraded to a buy mode. Here's your starting point right here. And what does it do? It goes to peak A, peak B, peak C, peak D. But the MACD and the 9 are keeping you on track. And it spirals up to at 10:30 a peak E. And what is this today that you have oil news? I don't know. But all of a sudden, it gives a good sharp pullback, making the H pattern. So this is a viable technique, and I just wanted to show you why it's so important when you're looking at Exxon. Look, Exxon's got a lot of work to do for the 9 to cross over the 14. The MACD's just yet hasn't crossed positive. Stochastic's only at 36%. And therefore, that's the reason why I've said this is a digestive phase. Not long-term positions, I wouldn't even want to think of telling you to do anything other than hold on for the ride and take a little, if you want to take a little money off. We were talking about that going to the 114 top. Yes, it's money management. Why not take something off? You can always plan to put it back. It did not get to my 99 target. It went to 102 from the 114 high. But in the meantime, back at the ranch, look, the weekly chart is still beautifully walking the 9-period moving average. It's just fantastic. Actually, it's walking the 14. The 9 is the one that keeps popping above. And the monthly chart does have a doji G/C. And this says you can get a cup formation, and at some point you should get your D, and then you've got to be somewhat careful. And that's Exxon. Question came in about, could I look at, where was it? Oh, that's right. Could I look at FDX? FDX is trading at, made a peak D. Remember the objective in the Chapman wave, get you a peak D. It made that peak D. It did pull back, and it's really the weekly chart that is the issue as far as I'm concerned. It's gone. Look, I have no choice from the doji candle to put peak A. I'm not a big fan of peak Ds that are made under the previous high, because it says, ooh, a lot of work needs to be done now to regenerate or to re-inaugurate some kind of a new up mode. And that's exactly what we're looking at here. It went to peak C, D, and even an E in the shortest, all underneath the horrible candle. FedEx, you remember, I think it was, there was some report, whatever it was, back on the 16th, the week of the 16th of September, it has a high of 215 and a low of 155. Oh. And here it is. It hasn't even been able to get, it's just gone to halfway. No, it hasn't even been able to get to halfway of that ugly candle. So this just tells me that Federal Express is telling me more about the economy than many other aspects. And Cintas is the one that was earnings yesterday, and it's up 7 today. That's a good sign. But I'm saying that weekly peak E, probably not going to go higher than 175 this week. We'll see what happens. But meantime, that is so far a good chance of a peak E in the weekly. But look, this is Cintas, 456 right now. CTAS is a symbol. Leg C in the monthly chart did a beautiful cup formation to go to leg C. A leg D, maybe a peak D this week, and the beautiful left side time match. That's the bar symmetry. Look at that. From the low that was, from the high that was made at 461. 0.44 on the week of the 17th of December a year ago. It did slide down to in June. 6 months later, it went to 343.86. And I drew in this left side, right side bar symmetry that took us to last week, which was 461, the target, and it hit it exactly, and then went higher. 470.23, pulls back, holds the 9-period moving average, and the earnings are coming out today. And I would just suggest that based on the chart formation at this potential peak G, it's an alternate count, I suppose. Well, no, it took out the left. Did it take out the left side low of 438.14? 439.54. No, it didn't. So this is going to be very interesting. I'll tell you, I'm not going to guess as to what Cintas does at the earnings report this afternoon. I think it's this afternoon, isn't it? I am going to say that if at any point between tomorrow and Monday's a holiday? Monday's a holiday. Monday. Well, I'm going to just make it, if between today and next week, if there's any touch of the 478, 482 area, not only will be that be fabulous action, but it'll also say the economy might have already made some kind of, I mean, let's face it, Cintas was in a recession for 6 months, from December last year to June of this year. Now it's on the rise. And this rise in overalls, uniforms, rentals, you just can't get, I don't know. Yes, people have to make a commitment, But a year-long commitment, or maybe it's even a 2-year commitment, I don't know. But they have to make a commitment. This is a big commitment, and the price is at an all-time high. This is a really good sign to say that a chunk of the work in the whole aspect of this big market, this bear phase of the market, I think a big chunk has been done, especially when you look at the cyclicals like Caterpillar. I'll be right back. Basil Chapman, Dow's at 511, S&P's up 55.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, so silver, that's SLV, iShares Silver Trust. The monthly chart is about to test the inside track repellent zone, right? So that's it. I want to be very fussy about this. I'm going to the actual ends of the wick. I know a lot of people have different ways of, I'm going to be doing this for subscribers on Saturday. I'm going to show a whole bunch of charts and we're going to be drawing trend lines in my overview for the weekend. And I'll do that because it's really important. I've found that I need to show them very much more often. And you've gone to your leg D and that gives you inside wedge target resistance line. Now I can change the color. I just added this so you can see it better. But now I'm going to make it the way I always do, dashed green line. That's your resistance target line. And here's your plumb line, exactly. 21.94 was a target. Today's high is 22.27. That's really important. And it's gapped up. Now what I'm looking at is The on-balance volume is a little bit overbought. The MACD is just a tad weaker than it was on that last pickup to the peak D. The stochastic has already pulled back under 71%. So I'm not going to say, oh, major turn down, but I am going to say there's a chance now, to go all the way from the 2214 level to under 21. That's a big ask. That means that gold, looking at gold, which is holding beautifully up 3.4 right here, and silver, the actual contract itself, that's the same as the SLV, holding well. I've got it in leg F. So far, there's nothing to say. If you look at the dollar couldn't even rally this past week when it had an opportunity, when the market was so weak. It's not a rally. This is not a rally at all. It couldn't hold and close above the pink 9-period moving average. So with that said, I think what we're looking at here in the market is two things: a reflex rally plus a really oversold condition. As far as I'm concerned, that 200-period exponential moving average springboard is in play. It hit it 3 times today. It's rallying. I love this action, but I want to see 33,500 by Friday. That'll be very good. Have a wonderful rest of the day.